Good evening, and thank you for joining The Breakdown with me, Toni Waterman. Here are the big topics we'll explore tonight. 10 years on from the global financial crisis.
Lost all of my kids' college savings.
What has Bermuda learned, and is it better positioned for the next meltdown? Real estate hit hard during the recession, and one of the island's leading real estate agents says certain parts of the market still haven't recovered. And Hump Day goes luxe. Local entrepreneurs turning routine Wednesdays into something to look forward to. Those stories and more, but first, the global financial crisis. 10 years ago, markets were in a state of chaos. People were panicked, worrying if they'd wake up without a job. In the U.S., the collapse of Lehman Brothers triggered a cascade of events that plunged global economies into prolonged recessions, massive unemployment, and forced central banks to embark on unprecedented stimulus programs. Tonight, we look at Bermuda, how it fared during the crisis, and how prepared it is for the next one. But first, a look back at what happened.
25,000 employees, $640 billion in assets, an $85 stock reduced to pennies.
What's the mood like in there?
Oh, terrible. Death. It's like a massive earthquake.
It was a spectacular fall from grace, the largest bankruptcy filing in U.S. history. September 15th, 2008, the day Lehman Brothers' 158-year history came to a stunning halt.
This is really stupendous. This has happened.
This is a whole nother level of confusion. This is a how bad, as you said, does it get?
The world would soon find out, although few could imagine the depth and duration of what was to come.
The stock market is now down 21%.
Because we're now down 43%.
What in the world is happening on Wall Street?
Who knows where this is going to end up? I mean, this is volatility we haven't seen, of course, since way before you and I were born.
Lehman's collapse wasn't the first crack, but it rocked the financial system to its core. It exposed how vulnerable banks were to debt-fueled growth, and that there was no such thing as too big to fail.
The byproduct of that bankruptcy, and in fact, are still lingering behind the curtain in many corners of Wall Street. I mean, it was quite unbelievable. And for those folks that worked there, it was extremely unbelievable because most of them were stockholders and they got completely wiped out.
Housing was the main culprit. During the mid-2000s, a bubble was forming. Money was cheap, people were buying, and banks were lending to just about anyone. The mortgages were packaged together, the good and the bad, and sold off to pensions, banks, and insurance companies. They produced juicy profits and seemed low risk because they had top-notch credit ratings. Then, the bubble burst.
Across this country, Americans are worried about whether they can make their mortgage payments or keep their jobs or ensure that their retirement is secure.
The first fissures hit in 2007. As interest rates rose and housing prices fell, defaults piled up. By April of 2009, foreclosures hit their peak, more than 200,000 homes in a single month. Unemployment also soared. The U.S. was officially in crisis.
There was huge dislocation within the financial community, firms going out of business, extreme nervousness, doom and gloom. I mean, you could cut it like a hot knife going through butter.
Contagion was swift. Foreign banks were active players in the U.S. housing market, and U.S. banks were multinational. Plus, other countries were going through a similar boom and bust cycle.
International observers looking in at the Irish banking system realised that there was a very dangerous exposure to a single asset class called property.
Ireland, Iceland, Greece, Portugal, Spain, Japan, South Korea, Hong Kong. There were few places to hide from the global financial crisis. Unemployment soared, governments initiated bailouts, and central banks embarked on unprecedented stimulus. It was nearly a decade before interest rates were raised in the U.S.
The economic recovery has clearly come a long way, although it is not yet complete.
Things have certainly improved. Global unemployment is falling, inflation is on the rise. Regulations have forced financial institutions to take less risk.
I think the banking system today is much sounder than it was at that particular time. I mean, could it happen again? I guess. But if I look back over my career, 55 years, I mean, I've only seen two, and if you include the crash of '87, three time periods where you had this complete meltdown.
Meaning, yes, it could and likely will happen again. The question now is, how prepared are we?
We're going to try to answer that question later in the show, but first, Bermuda. It wasn't long before the financial crisis made its way to the island, and the impact was far-reaching. Now, Bermuda, like the United States and parts of Europe, was going through an economic boom in the lead up to 2008, but for its own unique reasons. So after 9/11, international business was really buzzing. You had insurance companies, other firms coming to island, setting up shop, and bringing with them hundreds of jobs. And take a look at how that fed into GDP. So in 2001, Bermuda had growth of about 2%. The following year, it spikes up to about 5%. Yeah, we get this little drop off, but you can see that growth is trending higher. And the good times, they continue to roll on right through 2006, but that is when the tides begin to turn. Growth in 2006 is sitting at about 5.5%. 3 years later, the economy is contracting, and contracting by a lot. Growth that year was negative 5.9%. And this negative growth, it lingers. Bermuda's hit very hard, and it takes longer for the economy to recover. So the financial crisis is in full swing. So companies, banks, insurance companies, they're finding themselves in some pretty hot water. So what do to try to stay afloat and cut costs? They start laying people off, and that seeps in to other companies. Thousands of filled positions are lost during this time period. This is just the international business employment numbers. You can see that we get this spike in 2008, and over the following years, this sector loses about 1,000 jobs. But it's not just about these 1,000 jobs, because you got to remember that a lot of these people, they have spouses, they have children, they have friends and family that are coming to Bermuda, spending money and feeding into the economy. And you can see here that we still haven't recovered up to those numbers. And this is where we start getting into this vicious cycle, because you have higher unemployment, fewer people on island, and that does a doozy when it comes to the retail sales volume. Take a look at this. They contract for about 5 years. Yes, we get this spike right here, but you got to remember this has to do with America's Cup. And take a look at this right here. We are back in contraction mode when it comes to retail sales volume. So again, higher unemployment, fewer people on island. Take a look at where the sales volumes are. That is going to shrink the government's tax base. Now, you know how they say a picture is worth 1,000 words? Well, take a look at this picture right here. This is a graph of debt versus revenue. Revenue, the money that the government generates, the money that it brings in. That's this blue line right here. You can see that basically for the last decade, it's been rather stagnant, but the government is spending more money, a lot more money. So in 2008, government debt is about $175 million. Over the next decade, it spikes up to $2.5 billion. Servicing this debt is the #1 line item in the government's budget. 17% of all government spending goes towards bringing this line right here down closer to this line. Now, we can't talk about the global financial crisis without talking about the housing market, because of course that's sort of where it all originated from, right? So you have fewer people on an island. That's going to hit the rental market. Also, when people don't have job security, they're not exactly running out to the banks to take out mortgages to buy new homes. So the real estate sector here in Bermuda, also another area that was hit by the crisis. Buddy Rigo from Rigo Sotheby's International saying that certain portions of the property market still haven't recovered.
2008, as we all know, when the world came to an end as we knew it, we had almost a $700 million real estate market in Bermuda, which fell down to 2012 to just under 200 million. Over that period of time, we almost had a 30% year-over-year decline in volume in the markets. The interesting factor here is that while prices have remained constant, the values have actually declined. And what we've seen now, of course, for the average price of $1.1, $1.2 million for a house, that you're actually getting more house for the money now than you did in 2008. The lower middle end was hit the hardest. Certainly the condominium market in Bermuda has taken the worst toll in terms of value and in terms of volume as well. Properties are selling now for barely 60% in the condominium market as to what they were selling in 2008, with the exception of the new product that's coming online, the luxury products that weren't around with the new hotel tourism inventory that's come around. It has recovered, one, with respect to new product, and we've got new buyers in Bermuda looking at new hotel tourism products. Bermuda's commercial market has had lots of properties come out of receivership, Sonesta Beach property, Coral Beach, Pink Beach Club, the Lauren and Tucker's Point. Where it hasn't recovered is those dated properties, the lower middle end of the market have been unable to sell. I think so because we haven't hit another bubble. Unlike the rest of the world, I think Bermuda's property market has not experienced a rapid rejuvenation, any sort of surpassing the numbers that were achieved at the upper end of the market. Well, one of the reasons that the market hasn't perhaps revived as much as it could have done has been the financing opportunities. Bermuda doesn't offer 100% financing or 90% financing as they did. Owners are required to have much more equity. So therefore that has stifled any speculative growth in the market.
Buddy Rigo there from Rigo Sotheby's giving us his take on how the global financial crisis impacted Bermuda's real estate market. All right, time now for a quick break, but when we get back, we know the past, so what's the future? We'll be talking to experts on what Bermuda's learned from the 2008 meltdown and how prepared it is for the next one. Stay with us.
New Toyota Rush, Bermuda's biggest SUV with 7 seats. There's always plenty of room. Available at Bermuda Motors.
From happy beginnings and life choices that we make along the way,
Colonial protects your lifestyle with the best insurance cover at the best possible price.
Health insurance with far-reaching benefits.
Family protection and long-term financial plans.
Business insurance and generous employee benefits.
For happy beginnings to happy ever after, visit CGIGroup.com.
Colonial, where people come first.
Welcome back to the program. Tonight, we're taking a look back at the global financial crisis, taking stock of what we've learned and trying to figure out how prepared Bermuda is for the next recession. And believe me, there is going to be one. Gary Foster Skelton took to the streets of Hamilton gathering your 2008 financial crisis stories in this week's edition of Your Take.
Were you or anyone you know affected by the financial crisis?
A good friend's father was retiring at exactly that time. Instead of retiring well and having something to provide for his family, he had nothing all of a sudden one day.
I was in the United States at the time. I had an IT consulting business. Some of my biggest clients actually stopped all their projects overnight.
I was working at AIG, so I was very affected. It was like a trickle effect from the U.S. Like I knew people in the U.S. who lost their homes and lost their jobs and lost everything. But in Bermuda, it was like a year or 2 years later where people were actually losing their jobs.
A lot of people I know lost their jobs and had a very difficult time getting reemployed.
Personally, I was working in Dublin at the time, and we felt the repercussions in the Irish market as well.
Lost all of my kids' college savings. We were 2 semesters in and the whole thing was just gone because, and my personal savings dropped by over 50%.
Do you worry that something similar could ever happen again?
Oh, I think something similar could happen again.
The market becomes over-exuberant and it's got to have a correction at some point.
You look back on the financial crisis and it was policies that were trying to be implemented by government to be helpful, but in reality they didn't let companies and the free market do its thing. If a company does poorly, you let it die. You don't prop it back up and then let it make the same mistake twice down the road.
Well, certainly some very unsettling stories there, and something that people aren't going to want to be experiencing again, and neither do governments. So what changes have been made over the past decade to better protect Bermuda from another recession? And is the island actually better positioned to withstand the fallout? To help answer those questions, I'm joined on set now by Malcolm Butterfield. He's the CEO of the Bermuda Insurance Institute, and also Craig Simmons, who is an economics lecturer at Bermuda College. Thank you both for joining us this evening. Malcolm, I want to start off with you because we've gone through a little bit of what happened in the international business sector, but specifically, very briefly, what took place when it came to the insurance and reinsurance sector?
What took place in that industry, there was certainly a downsizing of the industry in resources, in people, and jobs. They had to think a little bit more about how to prepare for the crisis itself and prepare for the changes and the forward thinking that it would have to bring. So there was a whole different mindset, a reality check. So we saw a reduction of companies downsizing as a result, an increase in empty offices in Bermuda.
You know, there was a lot of discussion at the time about how to diversify Bermuda's economy when you have just two pillars, really, of the economy. If they both tend to crack, then you find yourselves sort of chopped off at the knees. Craig, do you think that there has been diversification enough to withstand another financial crisis over the past decade?
Well, diversification is organic. It's not something that a government can impose on its people. So you need to create a fertile soil for businesses to thrive, cutting back on certain kinds of regulation. And in other areas, you need more regulation. Blockchain is the next big thing, but that requires more regulation, not less. In the area of financial services, local financial services, I think we need more regulation rather than less. One of the big problems from the last financial recession was that in Bermuda, we had private debt of over $5 billion on a deposit base of only $3 billion. Normally, the financial services sector holds something back in reserve. Well, we did exactly the opposite. We loaned out all the money that Bermudians had, and then we went borrowing, leveraging whatever deposits we had, and put ourselves in a rather precarious position.
Has that changed at this point?
It has. At the moment, the volume of loans is in the region of about $3.2 billion. So we're about 104%. In other words, we still have loaned out everyone's deposits, but we're heading in the right direction. Now, where the ideal, where the sweet spot is probably somewhere between 80 and 90%. So we're going through a period of deleveraging. But of course, deleveraging means that, well, where a business is going to get the capital that they need to grow, we're in some ways between a rock and a hard place.
So Malcolm, what Craig is talking about there, trying to find the capital to grow your business, expand your business, is that something that the insurance market is thinking about right now? Where am I going to get the money? Where's the liquidity?
They need to not just think about it, they need to do it. Capital is very important for these companies to have available so that they can service and produce for their clients risk solutions. This is what's going to make the industry more efficient. We talk about being expensive in Bermuda as a jurisdiction to do business. I also think that the insurance industry itself must find ways to become more efficient. And I think that third industry, if you will, fintech, we've heard a lot about fintech, I think can help bring about some of these efficiency and effective technologies that are going to be needed going forward.
Okay, so you both have brought up fintech right now as a possible third pillar of the economy, but isn't fintech still fall under financial services? Isn't it kind of more of the same? Do you need something that's completely separate?
Well, Bermuda is a service exporting economy. We export services, and in return, we import manufactured goods. But yeah, we're a financial services jurisdiction. It's difficult to see how we could scale any other kind of activity.
A lot of things have certainly changed from 2006, 2001 really, when we saw this influx of insurance companies to the island. It boosted GDP, there was more people. It's a different atmosphere here now. It's a different place. Things have changed, not least of which is that you have a better tax regime in the United States. Is Bermuda, Malcolm, still relevant for the insurance industry?
Definitely. I don't think we'll ever lose our relevance. I think that growth is not just companies. I think we need to think about the resources and the people that can come with those companies. It's all right to say we have growth, but I think it's important that we have growth that bring people back into our system back into our economy. And then you get the domino effect, hopefully, of more jobs, not so many empty offices, and a real boost to the economy. So I think the fintech, what I'm hearing, which I'm glad to hear, I'm not an expert on fintech, but certainly what I am hearing is physical companies coming into our region.
One of the unanticipated outcomes of the global financial crisis was this emergence of China as a global superpower. It took a different tact when it came to dealing with the financial crisis. It shoved money into the system. And yeah, it's sitting on mounds and mounds of debt at this time, so you can debate whether that was the right thing to do. But if Bermuda's not able to diversify outside of a services economy, does it make sense to diversify who you actually do business with?
Yes, but we have to remember that services, we spend most of our money on services and not on goods. So when you're thinking about the future, the service sector is going to be an ever expanding sector. And of course you need the resources to drive that sector forward. I mean, we lost, 17% of our labor force as a result of the financial crisis. We lost thousands of young, talented Bermudians. So, when we talk about immigration and repatriation, we've got to get boots on the ground, both new boots as well as the old boots, the talented young Bermudians that left during the crisis. And we've got to attack the problem of education in innovative ways. I mean, we focus a lot on the 5 to, let's say, 21-year-olds, but there's a lot of research coming out of Roland Fryer at Harvard, where he's suggested that if you want to make a real difference with the talent pool, you've got to start early. You've got to start at sort of 6 months, because what we find is that looking at the difference in this U.S. between white kids and black kids tend to have a smaller vocabulary by the time they're one. And that
tends to be because of speech going in, the amount of speech that they're around on a daily basis.
So if you can find ways through the education system to beef up people's vocabulary at an early age, you're going to see some definitive differences on the ground. At the other end, you've got people in their 30s and 40s who need retraining.
Right, exactly. And something that the U.S. has failed miserably in doing, retraining those older people. Very quickly, because we're running out of time here. Malcolm, when you look at the situation right now, you look at the landscape, do you think Bermuda's better prepared than it was 10 years ago?
I think we're getting there. I think we need to accept change. I think we need to become more bullish about change. We're spending a lot of time talking about it, but I think we've got to really execute it. Prior to the crisis, and perhaps during the crisis, a lot of the talent came out of the accounting firms. I think we've got to start looking at other disciplines, engineers, scientists, modelists and analysts. We have to broaden the requirement of resources, because these are the types of people that are needed even in the international business and the insurance industry, given its complexity. So we have to accept the change, be ready for change. We're not quite there yet, but I think we're boldly going there. And I think we've got to be courageous when it comes to change, accept the change, and prepared to make some decisions, and hopefully everybody gets on board.
Craig, when you look at the debt pile, when you look at where GDP numbers, you see that we're back in contraction when it comes to retail sales volumes. I mean, are we heading in the right direction?
I think we're heading in the right direction. Are we better prepared for the next financial crisis? No. The off-balance sheet debt continues to rise. We haven't figured out how we're going to deal with the public pension. There needs to be some serious changes in how that pension is dispersed. People like myself and Malcolm should not be getting that public pension. We need to target those people who need it most, and that will help bring down that off-balance sheet debt.
Thank you both very much. Malcolm Butterfield, CEO of Bermuda Insurance Institute, and Craig Simmons, economics lecturer at Bermuda College. All right, we're going to head off for a quick break, but when we get back, it's one of the most overlooked days of the week until now, the Wednesday Wine Down, bringing wine lovers from all over the world. Stay with us.
Win a trip or two to the 2019 Trinidad Carnival. When you purchase a car from Bermuda Motors, your name will be entered into a draw for a chance to win an all-expenses-paid trip for two, including flights, accommodation, and tickets to the Trinidad Carnival. Visit Bermuda Motors on Church Street or bermudamotors.bm.
Ever wondered what smart health insurance feels like?
Colonial's 24/7 worldwide health insurance does most of the thinking for you.
1,500 CGI health claims are settled daily.
60% of claims settled automatically.
You can access your health plan almost anywhere, anytime.
And have smart wellness with online data tracking.
And more provider choices for you and the people who matter most.
Premier Health is smart health insurance, and it feels good.
Colonial, where people come first.
Welcome back to the program. In Norway, it's known as Little Saturday. On Twitter, it's the Day of Wisdom, and in the Addams family, she is the oldest daughter. But for most of us, it's just Hump Day, Wednesday, that smack dab in the middle day of the week, often overlooked and certainly less loved than Thursday or Friday. Until now, in this week's Bright Ideas segment, I go for a Wednesday wind down. It's as pleasing to the palate as the iteration is to the ear.
Well, welcome to Wind Down Wednesday.
I'm excited to see what's on offer tonight. Denzel Nelson and his business partner, Kashai Ming, have turned Whingy Wednesdays into a mid-week winner.
We have a Chardonnay blend and a Garnacha red.
Okay. I definitely want to try the cava because I happen to be a bubbles kind of girl. So.
With the wine, violinist, DJ, and array of drinks, you wouldn't know Wind Down Wednesdays is more experiment than main event.
I needed a product to be able to showcase my thesis, my business thesis, essentially, which is to create content or an experience, build a community around it, and then to sell people stuff.
The weekly event attracts dozens of people. Locations vary, as does the entertainment and wine, which patrons can buy at a discount. But for these millennial entrepreneurs, community building is the key to success. And they're taking direct marketing to a whole new level.
We have real conversations. Imagine DMing 500 to 1,500 people and like having real conversations with them. Like, hey, what's up? Nice shoes.
You hope for that community exists on social media. That is where the engagement exists. And that's kind of where the business lives. Then there's no event happening.
Or when their event only happens once a year, like National Rosé Day, Bermuda. The Luxed Out June event was a first for the island, tapping into summer's trendiest tipple and targeting the wine's near cult-like following.
I think it was in 2014, there was like a shortage of rosé in the Hamptons that's like legendary, and people still talk about it until today. And we're not just creating this event in Bermuda for Bermudians, but we're looking to bring people from the East Coast of the United States here.
Destination experiences.
To create destination experiences.
The event's 420 guests attracted the attention of Sweden's Bodvar House of Rosés, which has now partnered with the duo to promote their wine. Champagne Barons de Rothschild is also keen to work with the pair. In the meantime, Denzel and Kashai are keeping Wednesdays in Bermuda an event to look forward to.
To Wind Down Wednesday.
So it's the Wind Down Wednesday.
Cheers.
Thank you. Cheers.
Well, if you have some free time on your hands on a Wednesday night, certainly go out and check out the event. All right, that's going to do it for tonight's breakdown. Thank you very much for joining me. I'd love to hear from you. You can send me an email. My address, it should be popping up just about now. And you can always find me on Twitter for your latest news updates. My handle is Toni Waterman _. Next week, we are talking cannabis. As Canada legalizes the recreational use of marijuana, we take a look at what the pot industry could mean for the insurance industry, government revenue, and paying down public debt. I hope you'll join me then. Until then, take care.